On Hot Picks today, we are looking at restaurant stocks. Our guest's top selection is Chipotle. We're joined by Jon Tower, restaurant analyst at Citi. Jon, thank you very much indeed for giving us the time. I'm getting hungry already. Tell us why you think Chipotle offers upside.
Yeah, hey, Andrew, thanks for having me. So Chipotle, I think, is in a unique position, right? When you think about they're the leader in the fast casual space in the U.S., and frankly, they're growing at from a unit perspective, high single-digit clip. There's really nobody else behind them when it comes to size and scale within the subcategory. They're growing out this kind of, high premium Mexican category with very limited competition. Importantly, they're hitting really well on value for the dollar for the consumer. They're hitting well on convenience and speed and throughput and certainty for the guest, and frankly, transparency into the food, which I think has been of growing importance for the average consumer in the U.S. And, all of these things have translated into very strong unit level volumes, very strong unit level returns. And I think as we look out throughout 25 and 26, they have some drivers in place that'll continue to lead from a top line perspective. We just had some new products launched last week in honey chicken that's likely going to drive some incremental news to the brand and foot traffic to the stores. And then on top of that, you have some margin initiatives in the back half of the year that'll likely help ease some of the rising costs that have been hitting their business over the past 12 months. So we really like a story where you got top line and bottom line improvement going into the balance of the year, and frankly, over the next several years to come.
You say transparency into the food. Do you mean the tacos and burritos are made right in front of the customer?
Yeah, it's a combination of seeing the food prepared fresh daily and frankly right in front of you, but also the ingredients being sourced from sustainable farmers and cattle herders. So it's really a mix of those that they've brought to the forefront for the industry. Keep in mind, the brand's been around for a long time, despite them only being roughly 3,800 stores now, mostly in the U.S. But they led the charge there. And frankly, I think they get a lot of credit from customers because of that.
Tell us about Sweetgrass SG. What kind of a chain are they?
Yeah, Sweetgreen. They're a fast casual concept. No,
Sorry,
it's all good. So they're a fast casual concept. Today, they primarily focus on salads and bowls. They have protein plates as well. And, the major distinction between this and say, Chipotle is, their cuisine is much more salad focused, bowl focused. But importantly, what's transpired and kicked off really in 2024, or we saw evidence of it, is this implementation of this technology in their stores called Infinite Kitchen. And an Infinite Kitchen is effectively automating a large chunk of the make line for the consumer. And that allows them to, frankly, pull a good chunk of labor out of the stores when this equipment is put in. And specifically, they pointed to about 700 basis points of labor savings from these Infinite Kitchen stores versus a control group in the system. You also, with this technology, not only get the labor savings, you have greater, frankly, ingredient quality throughout time. In that you have the ingredients staying fresher for longer, and portion sizing is more consistent over time. So they've also alluded to the idea that there's about 100 basis points or so of COGS savings from this equipment being rolled in. Today, you've only got about 12 stores or so with Infinite Kitchens out of their 245 store base. Over the next year, that number will get to roughly 10%. And I think in 26, 27, 28, that's only going to build in terms of a percentage of their new store openings. And why I think that's important is if you take a step back, labor is probably the largest component of cost for the restaurant industry that's really out of their control. You can't really control wage rates. You can try and manage labor hours, but that doesn't always work well in the hospitality space. When you're able to effectively pull out a lot of those labor bodies in the stores, replace it with actual equipment without compromising the quality, of the experience for the customer, in fact, maybe even enhancing it, that to me means you start building much greater loyalty with guests and consistency of visits. And importantly, over the long term, it's going to allow the brand to hold the line on pricing while many others in the industry are going to need to take price to offset ongoing wage rate inflation.
Apparently one problem the robotics had to solve. How do you give out goat cheese? Because how do you use goat cheese at clumps? And how do you avoid squashing the cherry tomatoes with your giant claws? Anyway, CNBC had that. Listen, we better keep moving here. Darden, we've only got about a minute left. Why do you think Darden offers potential?
Look, they're a multi-branded concept. I think the most interesting thing about that company in 2025 is the fact that they're getting their mojo back at their core brand, Olive Garden. And specifically, they're on air with promoting price points for the first time, frankly, since the COVID epidemic struck. And it's an attractive price point, but they're not necessarily discounting on the menu. They're also bringing new product news to the menu, which had been absent really since COVID hit the U.S. And so you get new product news with attractive price points. And then they're also rolling out first-party delivery, which is new for them. And based on the work that we did, we believe that can be roughly 2 to 3% type of tailwind to their same-store sales over the next couple of years. You weave in the idea of roughly 3% unit growth in aggregate for the brand, and you've got high visibility into ongoing EBITDA growth in double-digit range over the next few years. And I think investors want that sort of visibility into consistent results.
Thank you very much indeed for joining us, Jon. Jon Tower, restaurant analyst at Citi. Really appreciate it. Let's have a quick look at the market.